While I wait for my fries, I'm going to tell you all about mortgage insurance. I get this question all the time. People want to know what it is, why they have to have it, and if there's any way to get rid of it, and there is, so I'll tell you all about it. The definition of mortgage insurance, it's essentially an insurance policy for the lender in case you can't pay your bill or if somebody dies and the payment can't be made. So it's the only way that allows you to borrow over 80% in a loan. So anytime you borrow over 80%, mortgage insurance will be required. There's generally speaking two types of loans that I deal with that have mortgage insurance. We have FHA and we have conventional. Let's talk about FHA first. On an FHA loan, they have upfront mortgage insurance that gets built into your loan, so it's not actually an out-of-pocket cost. And then they also have a monthly fee that gets added to your monthly payment. The reason people choose FHA is because it requires a lower down payment, and sometimes if your credit's a little bit damaged, it's a little bit easier to qualify for FHA. The downside is that if you don't put more than 10% down, you are going to have mortgage insurance for the entire life of the loan, which is usually 30 years. If you pay 10% down, it can drop off after 12 years, so awesome, right? If people are able to, I like to have them do a conventional loan because there is a couple different ways to buy out of mortgage insurance, and so they can increase their interest rate to cover the mortgage insurance, or you can pay cash up front to buy out of it. And this option's probably my favorite. And one of the reasons you'd want to do that is because then your break-even point is only 3 to 5 years, rather than if you just made the minimum monthly payment, your mortgage insurance wouldn't naturally drop off for 10 to 12 years. So you could get rid of it essentially in 3 to 5 years based on that you put money up front, or you could have it for 10 to 12 years. So over the long haul, you save a lot of money. You can also, if you can get rid of that monthly mortgage insurance, you can sometimes afford a higher sales price home. And so that's one of the big benefits I see is we get rid of that, and then somebody can afford more home. You can also do a combination between increasing the rate and paying a little bit of money, but every situation's different. So give me a call. We'll figure out what works best for you and your family, and then know that you need to call me and then call a realtor.